Hello and welcome to everyone in the virtual classroom to learn case flow statement. Let us take another question from Saurashtra University March 2020 examination question paper. The recent one. Have a look on the data. As usual, balance sheets have been given for 2 years. But let me draw your attention on the column of this balance sheet. Liabilities. Then afterwards the column is 2019 for which we have to prepare the cash flow statement, and then afterwards 2018. So it is a reverse sequence that has been given over here. One has to be careful about this reverse column at the time of preparation of the ledger account as well as at the time of reading or verification of the balance sheet in the last leg of the cash flow statement preparation. So reverse column has been given 19 first and then 2018. Then additional information. 6 points have been given for this question of March 2020 examination of Saurashtra University, TYBCom. Let us start it. As usual, we have to start cash flows generated from operating activities by taking the net profit of the year. We have to compare the two balances of profit and loss appropriation account given in the balance sheet. Have a look on the liability side. Fourth last item, profit and loss account. 2,50,000 current year, last year 2 lakh. It means profit of the year, net profit of the year is rupees 50,000. Let us record it in the cash flow statement. Have a look. Title A, cash flow generated from business operation or operating activities. Net profit, difference of balances of profit and loss appropriation account during period of two balance sheets. Current year's balance 2,50,000 minus last year's balance 2 lakh, that gives the profit of the year 50,000. Additional information, point number 1. The stock was valued 10% less in the previous year, which is decided to show at original cost price from the year 2018. Stock is valued at its cost price on 31st December 2019. It means in the current year for which we are preparing this cash flow statement, stock is valued at its cost price. But for the last year, that is 2018, stock was valued 10% less. And now it is decided that it is to be shown at its original cost price. So we need to pass a rectification entry for the valuation of closing stock of the last year, or you may say opening stock of the current year. Have a look on the asset side. Stock current year 1,17,000 and the last year 1,22,400. This adjustment has been given for this year 2018, and now it is to be valued at its cost price. So let us prepare a working note for the rectification in the value of stock, closing stock of the last year, or you may say an opening stock for the current year. This is the working note number 1, stock adjustment. Last year, that is 2018, stock was valued cost less 10%. Let us assume if cost was 100 rupees, then it was valued less by 10 percentage. 10 percentage of 100 is rupees 10. That gives the book value of stock 90 rupees in the last year. Because original cost was 100 and it was valued less by 10 percentage. So it means the valuation was made at 90 and now it is to be shown at its cost price. So if book value was 90, then cost was 100. If book value shown in the balance sheet 1,22,400, what should be its original cost price? Apply the figure. It gives 1,36,000 original cost of the stock. So if we have to show the stock of the last year at its original cost price, then the value of stock to be increased. New value 1,36,000 minus old value 1,22,400, that gives 13,600. By this amount, we have to adjust the closing stock of the last year or opening stock of the current year. So for 31st December 2018, new value of stock would be 1,36,000. Old value 1,22,400, plus we have to increase it by 13,600 as per our calculation. That gives the new value of the stock for 31st December 2018 1,36,000. So earlier it was 1,22,400 shown in the balance sheet, and now if we have to value that stock at its cost price, the value is 1,36,000. So by 13,600 we have to increase the value of the stock. It was the closing stock of the last year, means it is an opening stock for the current year. So what would be the impact in the cash flow statement that we are preparing? As I told you, last year's closing stock, it is an opening stock for the current year. So if you increase the value of opening stock of the current year, ultimately what would be the impact on the net profit? Opening stock, you are going to increase the value of that opening stock of the current year by 13,600. Other figures remains the same. So obviously your GP is going to reduced by same 13,600. GP would be transferred to profit and loss account, and if your GP was decreased by 13,600, ultimately cascading impact will come on the net profit. Your net profit is also to be going decreased by 13,600 because other figures of the trading and profit and loss account remains as it is. So increases in the value of opening stock, ultimate impact on the current year's profit is that your current year's net profit is going to be decreased by 13,600. So adjustments, under the title of adjustments, very first item, increases in value of opening stock as per working note number 1 that we saw, minus 13,600. Net profit of the current year is to be decreased by 13,600 because the value of opening stock has been increased by 13,600. I hope this explanation discussion would be very clear in your mind as far as the adjustments in the value of opening stock is concerned. Then point number 2. It is related with RPS redemption. Number of times you saw RPS redemption in cash flow statement as well as in the fund flow statement also. I am reading the second point. The company has redeemed preference shares at 5% premium in the beginning of the year after complying with the required provisions of law. These wordings are very important. after complying with the required provisions of law, means Companies Act provision. For this purpose, required amount is transferred to capital redemption reserve from general reserve. Here also the word is required amount. For this purpose, required amount is transferred to capital redemption reserve from general reserve. Let us verify the position of equity share capital as well as preference share capital and then CRR. Have a look on the liability side. It is related with RPS redemption. So before we verify the equity share capital, very first item, 10% preference shares each of rupees 10 on which paid rupees 8. It means it is a partly paid up capital. Opening balance 4 lakh, closing balance nil. And you know, as per the Companies Act provision, partly paid up shares cannot be redeemed. But over here, it has been said that RPS has been done after complying with required provisions of Act, means provisions of Companies Act, and as per provisions of the law, partly paid up shares cannot be redeemed, only fully paid up shares can be redeemed. So what does it mean? Over here the closing balance of preference share capital is nil. It means the entire preference share capital has been redeemed in the beginning of the current year. Now partly paid up shares cannot be redeemed, and even though closing balance is nil, it means redemption has been done. So इसका मतलब क्या होगा? It means first of all company would have demanded a call of rupees 2 on this partly paid up share capital, and then afterwards once the preference share capital becomes the fully paid up, only then afterwards the process would have begun and redemption would have been completed. So provisions of Companies Act, one has to follow it at the time of redemption of preference share capital. Over here it was a partly paid up share capital. So first of all you need to convert it into the fully paid up share capital by demanding a call of rupees 2, and then afterwards the process of redemption should be completed. Let us prepare a working note for the RPS redemption. Have a look. Working note, redemption of preference share capital. We already prepared one working note for stock adjustment. So now this is the working note number 2 for redemption of preference share capital. Working note number 1 was for stock adjustment. This is working note number 2 for redemption of preference share capital. Preference shares are partly paid up, as I already show you in the balance sheet and we verified it. So first demand a call of rupees 2. At present preference share capital having rupees 4 lakh, 8 rupees paid up per share. It means 50,000 shares are there. 50,000 shares into 8 paid up, that gives rupees 4 lakh opening balance or the balance closing balance of the last year. So let us demand a call of rupees 2. Call money 50,000 shares into rupees 2, that gives rupees 1 lakh. So after receiving this call money of rupees 2 on 50,000 shares, preference share capital has been converted into fully paid up preference share capital. Earlier it was partly paid up, but after receiving this call, it has become fully paid up preference share capital. And now the process of redemption can be started. What is the total amount required for redemption? After receiving the call, you know, now preference share 50,000 having a value, paid up value is rupees 10. Earlier it was rupees 8 in the balance sheet, but we demanded a call of rupees 2, and that is why it became a fully paid up preference share capital of rupees 10. So nominal amount 50,000 shares into 10, that gives 5 lakh rupees. Then redemption premium 5% of rupees 5 lakh 25,000. That gives the total amount required rupees 5 lakh 25,000. Let us give a planning of redemption in the context of requirement of the law. Total amount required for RPS rupees 5,25,000, having two components. One is nominal amount of RPS as per our above calculation rupees 5 lakh, and second component is redemption premium on RPS rupees 25,000. Total 5,25,000. Nominal amount of RPS planning. As it has been said in the question that required amount. Let me show that wordings once again. Required amount. What is the meaning of that required amount? For this purpose, these are the wordings. Required amount is transferred to capital redemption reserve from general reserve. Our nominal requirement is 5 lakh. So let us verify the position of equity share capital as well as the CRR. See, equity share capital 6 lakh opening balance, 7 lakh 50,000 closing balance. It means during the year company has made a further issue of rupees 1 lakh 50,000, and then afterwards this is the balance of capital redemption reserve. Opening balance nil, closing balance 3 lakh 50,000. It means for our requirement of rupees 5 lakh, that is for the nominal amount of RPS redemption, company has applied both the option, a fresh issue of rupees 1 lakh 50,000, 6 lakh versus 750, and creation of CRR rupees 3 lakh 50,000 from the general reserve as per instruction given in the point number 2. Required amount is transferred to capital redemption reserve from general reserve. So from a fresh issue of rupees 1 lakh 50,000 and the required remaining amount 3 lakh 50,000 has been transferred to capital redemption reserve account from the general reserve. So both the available options have been applied by the company for the nominal amount of RPS planning. Have a look. Fresh equity issue rupees 1 lakh 50,000. Remaining 3 lakh 50,000. 5 lakh minus 1 lakh 50,000. So that gives remaining 3 lakh 50,000 from general reserve transferred to CRR account, capital redemption reserve account. As we already saw in the balance sheet, there was a closing balance of capital redemption reserve account with an amount of rupees 3 lakh 50,000. So that has been created from the general reserve account in the current year for this redemption of nominal amount of RPS. So fresh equity issue 1 lakh 50,000, creation of CRR from general reserve 3 lakh 50,000. Then redemption premium on RPS. We need rupees 25,000. In the balance sheet, security premium has been given rupees 5,000 in the form of opening balance. Have a look. Liability side, it is there as a third item. Security premium, opening balance 5,000, closing balance nil. So let us utilize this 5,000 first for our requirement of redemption premium on RPS. So security premium account 5,000. Still we need remaining 20,000 because our requirement is 25,000 and security premium account only 5,000 was available. So after taking that amount, remaining 20,000 would be written off to the profit and loss account of the current year as there is no other option available. So 25,000 redemption premium on RPS from security premium 5,000 and remaining 20,000 from profit and loss account means 20,000 would be written off to the profit and loss account of the current year. So this was the planning of the redemption. Let us record it in the form of journal entry and then afterwards posting in the concerned ledger accounts of RPS redemption process. Have a look. First, for a call, bank account debited 1 lakh to preference share capital account credited 1 lakh. 50,000 shares into rupees 2, that gives rupees 1 lakh. Preference share capital has been converted into fully paid up share capital by demanding and receiving this call money. Now process has been started. Resolution in the board meeting for the redemption decision. Preference share capital account debited 5 lakhs. Redemption premium on RPS account debited 25,000 to preference shareholders account credited 5 lakh 25,000. Third journal entry for the fresh issue. Bank account debited 1 lakh 50,000 to equity share capital account credited 1 lakh 50,000. We saw this amount in the balance sheet also by comparing the two balances of equity share capital account, and we decided the amount of fresh issue 1 lakh 50,000. Then creation of CRR. Fourth journal entry, general reserve account debited 3 lakh 50,000 to capital redemption reserve account credited 3 lakh 50,000. Nominal amount planning is over. Now redemption premium on RPS. Let us write it up. Share premium or security premium account debited 5,000. Profit and loss account debited 20,000. 2. Redemption premium on RPS account credited 25,000. Process is over. Provisions have been fulfilled. Now payment can be paid. Last journal entry for the payment. Preference shareholders account debited 5 lakh 25,000 to bank account credited 5 lakh 25,000. So these were the journal entries for the process of redemption of RPS capital. Let us give the posting impact in the concerned ledger accounts related with RPS redemption process. Have a look. Preference share capital. First J. This is the opening balance 4 lakh versus no closing balance. First J for the call money, as we saw just in the last discussion. Bank account debited to preference share capital account credited 1 lakh 50,000 shares into 2 rupees. Now preference share capital has been converted into fully paid up preference share capital. Second journal entry for the resolution in the board meeting. Preference share capital account debited 5 lakhs. Redemption premium on RPS account debited 25,000 to preference shareholders account credited 5 lakh 25,000. Opposite narration, opposite amount. Preference share capital account 5 lakhs, redemption premium on RPS account total 5 lakh 25,000. Third journal entry, that is for a issue. Bank account debited to equity share capital account credited rupees 1 lakh 50,000. Fresh issue. Opening balance was 6 lakh, closing balance was 7 lakh 50,000. As we already saw in the balance sheet. So after receiving this money 1 lakh 50,000, total is 7 lakh 50,000. It's over. It is not 1 lakh 30,000, but it is 7 lakh 50,000. So fresh issue made in the current year 1 lakh 50,000 and equity share capital account is over 7 lakh 50,000. 7 lakh 50,000. Fourth journal entry, that is for the creation of CRR. General reserve account debited 3,50,000. This is the general reserve account. 2. CRR account credited 3,50,000. This was for the creation of CRR, fourth journal entry. Now redemption premium on RPS, fifth journal entry. Security premium account debited. Have a look. Security premium or share premium account. Share premium or security premium account debited 5,000. Profit and loss account debited 20,000. 2. Redemption premium on RPS account credited 25,000. Opposite narration. Share premium 5,000. Profit and loss account 20,000. Total 25,000. And the last journal entry for the payment. Preference shareholders account debited 5,25,000. 2. Bank account credited 5,25,000. So these were the posting impact of the journal entry related with RPS redemption process. Let us close the ledger account and find out the balancing figure. Preference share capital account over 5 lakhs, 5 lakhs. Redemption premium on RPS 25,000, it's over, no balancing figure. Share premium or security premium 5,000 over, no balancing figure. Preference shareholders account 5,25,000, it's also over, no balancing figure. Let us verify the general reserve account. Opening balance 4,50,000, closing balance 2 lakh. This was for the creation of CRR. Total of debit side 5,50,000. Put it on the credit side 5,50,000. That gives a balancing figure of rupees 1 lakh on the credit side. What it could be? Apply the common accounting sense. It must be the current year's saving from profit and loss appropriation account. Profit and loss appropriation account debit to general reserve account credit. Current year's saving transfer from profit and loss appropriation account. Then CRR account. This is the posting from general reserve. It is there in the form of closing balance 3,50,000, it's over, no balancing figure. Equity share capital account. Opening balance 6 lakh, closing balance 7,50,000. Issue made in the current year 1,50,000. Total 7,50,000. 7,50,000. It's over. After this amount of fresh issue 1,50,000. Total 7,50,000. Cash flow impact. Let us verify the 7 ledger accounts once again for our cash flow statement impact. Have a look. Preference share capital account. On the credit side, title came bank. Call money received rupees 1 lakh. Under title C, cash flow statement, title C. Have a look. Cash flow generated from financial or financing activities. Call on RPS plus 1 lakh. Let us verify the next ledger account related with RPS redemption process. Share premium, security premium account is over. Redemption premium on RPS. There is a title profit and loss on the credit side. Rupees 20,000 redemption premium on RPS has been written off to the profit and loss account. Does it look like a cash transaction? Does it look like an operating transaction? No, it is not an operating transaction. So let us add back it in the current year's net profit once again under first title. Adjustments for non-cash and non-operating items. Redemption premium on RPS written off plus 20,000. Next ledger account. After redemption premium on RPS, preference shareholders account. On the debit side, title came bank 5,25,000. It indicates cash outflow, cash payment. Under title C, redemption of RPS, with premium. Redemption of RPS with premium minus 5,25,000. Next ledger account related with RPS redemption process. General reserve account. On the credit side, title came profit and loss appropriation. Merely it is a transfer. It is a non-cash item. It is a non-operating item. So let us add back it in the current year's profit once again. Transferred to general reserve, rupees 1 lakh. Transferred to general reserve plus 1 lakh. Next ledger account. After GR, CRR account, nothing is there, 350 from GR, 350 as a closing balance. Equity share capital account, on the credit side, title came bank 1,50,000, indicates cash inflow. Under title C, fresh issue 1,50,000. Under title C, issue of equity share capital plus 1,50,000. So we closed 7 ledger accounts related with RPS redemption process, and then we gave the concerned impact under the respective title of the cash flow statement. Let us verify all the 7 ledger accounts once again. Have a look. Redemption, preference share capital account, share premium account, redemption premium on RPS account, preference share holders account, then general reserve account, then CRR capital redemption reserve account, and equity share capital account. 7 ledger accounts we closed related with RPS redemption process. Let us verify the next point. Point number 3, dividend at 25% is declared and paid on equity share capital. On equity share capital, 25% dividend has been declared and paid. Have a look. What is the position of equity share capital of the last year? Rupees 6 lakh. Second item on the liability side, equity shares 6 lakh. Closing balance of last year 6 lakh. So 25% of 6 lakh is 1,50,000. Let us prepare a ledger account for dividend. 25% of 6 lakh, 1,50,000. Dividend is a distribution of profit. So profit and loss appropriation account debited to dividend account credited 1,50,000. तो पहले प्रॉफिट में से लिया और अब पेमेंट करेंगे. So second JE, dividend account debited to bank account credited 1,50,000. Total 1,50,000, 1,50,000. It's over. Cash flow impact. On the credit side, title came profit and loss. It's a non-cash, it's a non-operating item. So this 1,50,000 will be added back under the first title. While on the debit side, title came bank, it indicates cash outflow. Under title C, this will be reported as a cash outflow. Let us do it. Let us report it in the cash flow statement. Let us add back it under the first title. Dividend. 25% of 6 lakh plus 1,50,000. Then under title C as a payment, as a cash outflow. Dividend paid on equity shares, 25% of 6 lakh minus 1,50,000. Next item. Under the additional information, item number 4. The company has made provision of rupees 75,000 for depreciation on plant during the year. And then afterwards another point has been given related with plant. But before that, let us record this depreciation in the plant account. A very simple one. Profit and loss account debited to plant account credited 75,000. This is the plant account, opening balance, closing balance. Profit and loss account debit 2. Plant account credit 75,000. Depreciation is always a non-cash item. So as a non-cash item, we have to add back it in the cash flow statement under first item. Depreciation on plant plus 75,000. Second point also related with plant in the same point number 4. Let us verify the plant which book value rupees 25,000 was sold with a loss of rupees 5,000. Means जिसकी book value 25,000 की थी, it has been sold with a loss of rupees 5,000. It means the selling price would be rupees 20,000. So bank account debited 20,000, profit and loss account debited loss 5,000 to plant account credited 25,000. Let us give the posting impact. Bank account debited 20,000, profit and loss account, that is for the loss, debited 5,000 to plant account credited its original book value 25,000. Cash flow impact. Title came bank 20,000 indicates cash inflow. Under title B, title came profit and loss account loss 5,000. It is a non-cash item. It is a non-operating item. So this 5,000 will be added back under the first title in the profit of the year. Once you close this account, the total of the credit side is bigger, 9,50,000. Put it on the credit side, 9,50,000. That gives a balancing figure of rupees 2 lakh. What it could be? It must be the purchases made in the current year. Plant account debited to bank account credited 2 lakhs. This purchases indicates the cash outflow. So under title B, these 2 lakhs will be reported as cash outflow. So selling of plant 20,000, purchases of plant 2 lakhs under title B, and loss as a non-cash item will be added back under the first title plus 5,000. Depreciation 75,000 we already reported under the first item. Let us report this transaction under first title loss due to sale of plant. Loss on sale of plant plus 5,000. Now title B, one is purchases, another is sale related with plant. Title B, cash flow generated from investment or investing activities. Sale of plant plus 20,000. Purchases of plant minus 2 lakhs. So this was related with the plant. 2 points have been given in point number 4 related with plant only. One was depreciation and then afterwards the transaction of sale. We gave the posting. We close the account, we find out the balancing figure, and then we give the impact in the cash flow statement also. Point number 5, additional information. Point number 5, a piece of land was sold, profit on which was credited to capital reserve. Over here, neither the cost price of the land nor the selling price of the land has been given. We need selling price of the land to report it in our cash flow statement. So have a look in the balance sheet. What is the position of land and capital reserve? Because instruction is that profit was credited to capital reserve. See the balance sheet. On the liability side, very first item land, opening balance 2 lakhs, closing balance 1 lakh. On the liability side, capital reserve. This is the capital reserve. Last year balance was nil, current year 25,000. Let us prepare these 2 ledger accounts related with this transaction. Have a look. Land account. Opening balance 2 lakhs, closing balance 1 lakh. Capital reserve account. As we saw in the balance sheet, no opening balance versus closing balance 25,000. Now instruction has been given that the profit on sale of land was credited to capital reserve account. There are no other transactions given for the capital reserve account. तो ये जो क्लोजिंग बैलेंस है 25,000 की, वो कहाँ से आई होगी? It must be the transfer of profit from land account, the profit which was transferred to capital reserve account. तो इनकी जेई क्या बनी होगी ट्रांसफर ऑफ प्रॉफिट की? लैंड अकाउंट डेबिटेड टू कैपिटल रिजर्व अकाउंट क्रेडिटेड, ट्रांसफर ऑफ प्रॉफिट 25,000. So lend account debit to capital reserve account credit, transfer of profit 25,000. And this profit remains as a closing balance at the end of the year in this capital reserve account. Account is over 25,000, 25,000. Come on the lend account. After this transfer of profit, total of debit side 2,25,000. Put it on the credit side 2,25,000. That gives a balancing figure of rupees 1,25,000 on the credit side. What it could be? This is the selling price of the land which has been sold in the current year. Bank account debited to land account credited 1,25,000. तो इसका मतलब ये हुआ कि इनकी कॉस्ट प्राइस होनी चाहिए 1 लाख एंड द सेलिंग प्राइस इज 1,25,000 एंड द प्रॉफिट that took place is 25,000 that has been transferred from land account to capital reserve account. So by this way you have to decide the selling price of the land. पहले प्रॉफिट को ट्रांसफर करें लैंड अकाउंट डेबिट करके कैपिटल रिजर्व में, and then afterwards close the land account debit side first, put it on the credit side, decide the balancing figure on the credit side which is the selling price of the land. टाइटल केम बैंक इंडिकेट्स केस इनफ्लो अंडर टाइटल बी के नीचे रिपोर्ट करेंगे, while capital reserve account nothing is there which can affect the cash flow. So only one item, selling of land 1,25,000 under title B. Sale of land plus 1,25,000. One more item in the additional information. The last point, point number 6, having something new. Let us read it. A miscellaneous expenses of rupees 25,000 was paid during the year. Have a look in the balance sheet. Last item, miscellaneous expenses 120 balance of last year, 1,25,000 balance of current year. And in the current year, as we saw in the point number 6, expenses of rupees 25,000 was paid during the year. Let us prepare a ledger account for miscellaneous expenses. Have a look. Opening balance 120, closing balance 125, then paid in the current year. Miscellaneous expenses account debited to bank account credited 25,000. That gives the total of debit side 1,45,000. Put it on the credit side. That gives a balancing figure of rupees 20,000 on the credit side. What it could be? It is the amount that has been written off in the current year. Over here, company has created this miscellaneous expenditure as a deferred revenue expenditure, not as a routine revenue expenditure, but as a deferred revenue expenditure, and that is why it has been capitalized and shown in the balance sheet. It means the benefit of this expenditure is accrue for a longer period in the future period also, and that is why company has created this miscellaneous expenses as a deferred revenue expenses, and by capitalizing it, it has been shown in the balance sheet. In the current year, company incurred an additional expenditure of 25,000 that we debited to this account and crediting bank account. Then once we close this account, we are getting a balancing figure of rupees 20,000 on the credit side. Means in the current year, by applying the concept of amortization, company has written off rupees 20,000 in the current year's profit and loss account. I hope this explanation would be very clear in your mind for miscellaneous expenses. Cash flow impact. Title came profit and loss, written out. It's a non-cash item, it's a non-operating item. So under the first title, this 20,000 will be added back. Over here, debit side, title came bank indicates cash outflow payment under first title, but as a last and separate item, this will be reported rupees 25,000 as a cash outflow. Let us do it. Let us report it. 20,000 written off as a non-cash item, as a non-operating item. Miscellaneous expense is written off plus 20,000. Then paid 25,000 in the current year under the first title, but after deciding cash flow from operating activities, this would be the last and separate reporting. Extraordinary items, miscellaneous expenses paid minus 25,000. Additional information got over. 6 points were there and we completed all the 6 points. Let us verify the balance sheet for the remaining items of the question. One by one, come on the asset side first. Land over. Building. Opening balance 1,72,500 versus closing balance 2,40,000. What does it mean? It means in the current year an additional purchases has been made worth rupees 67,500. Building account debited to bank account credited. Under title B, investing activities, purchases of building. Have a look. Purchases of building minus 67,500. It indicates cash outflow. Purchases made in the current year. Once again, balance sheet verification. Asset side, after building, plant already over, stock, debtors, prepaid expenses and bills receivable, item of current assets. We will be reporting it after deciding cash profit from the business operation. Second title would be changes in CA and CL. Stock, don't forget, balance of last year has been changed now. It is 1,36,000 as per our first working note. So 4 items of current assets, stock, debtors, prepaid expenses, bills receivable. Cash balance को हम लास्ट में वेरीफाई करते हैं. Miscellaneous expenses already over. Come on the liability side. Preference share capital over, equity share capital over, security premium over, capital reserve over, capital redemption reserve over, general reserve over, balance of profit and loss account over, provident fund, item of current liabilities 50,000, 50,000, no change. Creditors and bills payable, item of current liabilities, we will be reporting it under the title of changes in CA and CL under the first item. Let us decide the cash profit generated from business operation and then afterwards we will be reporting changes in CA and CL. Have a look. These are the adjustments item 1, 2, 3, 4, 5, 6 and 7 items, total of which is plus 3,56,400. That gives cash profit before changes in working capital or before changes in CA and CL. 4,06,400 plus. So cash profit before changes in CA and CL. Now second sub-reporting, changes in working capital or changes in current assets and current liabilities. You know the relationship. CA with cash flow, negative relationship and CL with cash flow, पॉजिटिव रिलेशनशिप. CA के साथ नेगेटिव है तो CL के साथ पॉजिटिव है. स्टॉक डिक्रीज इज इन CA, नेमली स्टॉक, इंक्रीज इज द कैश फ्लो प्लस 19,000. Decrease is in CA, namely debtors, increase is the cash flow plus 1,04,600. Increase is in CA, namely prepaid expenses. Decrease is the cash flow minus 2,500. increase is in CA, namely bills receivable, decrease is the cash flow, minus 12,500. Now two items of current liabilities. Let us report it. Decrease is in CL, namely creditors, decrease is the cash flow, minus 25,000. Increase is in CL, namely bills payable, increase is the cash flow, 1,05,000. Net impact of these six items of CA and CL is plus 1,88,600. Answer: cash flow from operating activities. Earlier cash profit was 4,06,400. 4,06,400. Now add this impact of CA and CL. 1,88,600, that gives plus 5,95,000. Cash flow from operating activities minus miscellaneous expenses paid 25,000, that gives the final answer of A, net cash flow from operating activities plus 5,70,000. B. Four items are there under the title of B, and the net total net cash flow from investing activities B minus 1,22,500. Likewise under title C, four items are there. Net cash flow from financing activities minus 4,25,000. So we got the three answer: A 5,70,000 plus, B minus 1,22,500, and C minus 4,25,000. Ultimate picture: A plus B plus C. What is the net position of cash flow of entire business? Make the total of A plus B plus C, that gives plus 22,500. Add opening balance of cash and bank. Let us verify the balance sheet for opening as well as the closing balance of cash and bank. Have a look. Cash balance. Last year 18 it was 77,500, and the current year's closing balance is 1 lakh. So add opening balance 77,500, opening balance of cash and bank, add it 77,500 is equal to closing balance of cash and bank 1 lakh rupees. Let us verify the balance sheet once again. What is the closing balance has been shown over there in the balance sheet? Is it 1 lakh or not? Yes. Cash balance current year 2019, it is 1 lakh rupees. So it does get tallied with our answer of rupees 1 lakh is equal to closing balance of cash and bank 1 lakh. Our answer does get tallied with the closing balance of cash and bank given in the balance sheet. So this was a question of March 2020 question paper of Saurashtra University, Tivaipiko. It was a good question. Miscellaneous expenses was a new item of this question. RPS redemption was also there. I hope each and everything of this question would be very clear in your mind. Thank you. Thank you very much.